Hello everyone. The question that we have to do today is a trailer, right? It's from SBR kit, Captain kit. Okay. Uh, Similar to the previous questions that we've done, this is a Section A question. And as for Section A questions the strategy that I've recommended is to read the requirement first and then read the information from the question. All right, obviously not the entire information, but the information that caters to your requirement. All right, that you feel will cater to your requirement. Now, over here in this question, we have one, two, three, four, right? So A part, A, you have three parts, and B. So obviously we'll look at A part one first, which is for 6 marks. It says discuss with suitable workings how the loan to the charitable organization should be dealt with in the consolidated financial statements for the year end 31st May 2023, right? So this specifically talks about loan to the charitable organization, right? Which, if we, like I said earlier, and I told you guys earlier, that whenever you look at a question, you first analyze the structure, right? And as soon as you analyze the structure, you get to know which part it might relate to. Obviously, it's not necessarily that you're right about it. Obviously, when you go into the details, you might know that, for example, let's say there's a part which relates to IFRS 9 fair valuation, whereas when you read the details, it's related to your, let's say, impairment, right? That could be different, but at least you'll have this boundary wall drawn in your mind, a mind map, which will basically tell you which areas to cater, or which areas to lighten up in your mind. All right, so this, for example, question, for example, loan to charity, probably IFRS 9 restructuring plans, for probably IS 37, right? Acquisition of park, so it's probably consolidation. So we can generally, and obviously, if you look at the the structure of the question, the examiner has already bifurcated the question for you guys. So if the examiner is making easy for you, they're making it easy for you to read the question, to extract the information. Why do you want to make it difficult for yourself, right? Majority of the students, I would say, 85, 90% of the students, right? They start from the top background financial statement extracts. So Taylor Public Company operates in the manufacturing sector and all over, right? And they go on, go on, go on. And in the end, they read the requirement. When they come to the requirement, they have already forgotten what was the, like, what information they had to cater, what information they had to extract in order to cater to the requirement, right? So that's a very wrong approach, especially in questions that are long. All right, Section A questions, right? So long questions with different requirements. Okay, for Section B questions, you have just one requirement, probably discuss the director's approach to this financial reporting stance, or something like that, right? So that's pretty much simple, right? You have different transactions, and you know exactly what transaction or what standard will apply to that transaction, and you can simply discuss, which is an open-ended thing, right? But the point is, over here it's bifurcated for you, and the requirements are also different, right? So it's better that you read the requirement first, cater only read the information that caters to that requirement, and then move on to the next part. All right, so let's say, like we read, the first requirement needs a discussion, needs to be a discussion with suitable workings, right? Related to what? Loan to charity. So let's see what it is about. Trailer has made a loan of $50 million to a charitable organization for the building of new sporting facilities. All right. The loan was made on 1st June 2022 and is repayable on maturity in 3 years' time. All right. So the interest rate on the loan is 3%, but Trailer assesses that an unsubsidized rate for such a loan would have been 6%. So I'm giving out $50 million to a charitable organization, and I'm giving it to them on 3%, right? If, for example, this loan would have been to a private school or some other kind of private institution, I would have gotten 6% on it. But I'm subsidizing 3% for this charitable organization, right? The first interest payment was made on 31st May 2023, which is the end of the current year, right? The trader initially recorded a financial asset at $50 million. Let's see at what basis, and reduced this by the interest received during the period, which is par value into coupon rate. All right. The loss allowance has been correctly dealt with, so you don't have to worry about the impairment side of IFRS 9, right? Now, the point is you have to discuss with suitable calculations. First and foremost, within this 1, 2, 3, 4, 5, 6, 7, right? 7 lines, information given within 7 lines, you have 6 marks, right? Now that's not a criteria. Number of lines is not a criteria, right? The criteria is on what areas you can talk about, okay? So the first and foremost in this case is the assessment of fair value, right? At initial recognition. All right. So this is what IFRS 9 tells you. IFRS 9 tells you that you have to record every financial instrument at fair value at the time of initial recognition, right? And fair value is calculated according to IFRS 13, right? So IFRS 13 tells you exactly. Once you have calculated the fair value, right? Let's say, let's work out the calculation. All right. So this is not a level 1 investment. It's not a level 2 investment. It's a level 3 investment, right? Because we don't have anything similar to that. So we'll just calculate the present value of all cash flows. First cash flow will be 50. I'll work it in thousands. All right. So 50,000 into 3%. That's 1500. Second year it will be this, and third year it will be this plus your principal that you get back, right? Discounted at the unsubsidized rate. So that would be 1.1.06 to the power minus 1, minus 2, minus 3. So this is minus 2 and this is minus 3. All right. You multiply it and you get the fair value, right? So the fair value at initial. Now I haven't drafted the introduction, right? But I've told you what to write in the intro part. Drafting is easy, okay? Everyone, like I said earlier, and I always tell my students that drafting is something that is, it requires. For example, I have a certain range of words that I use, right? Probably you guys don't use those. You guys don't use probably those words or that tone, right? So the point is, I have a certain tone, I have certain words that I play along with, right, to give out my introduction, and you guys don't use those words, right? So the point is, I don't want anyone to restrict just because this is my way of writing, this is my way of giving out an introduction, right? You guys have your own way. Point is, you should know exactly what to write. What means the content. How to write, it's your choice, right? Now, fair value at initial recognition is 40, 45990. Let's call it 46 million, right? 46, because the information that we're given in the question is in millions. I'm working it in thousands, right? So I can call it 46 million. It's not going to be wrong. Okay, please. Fair value at initial recognition is 46 million. Whereas, what's the name of the company? Jailer. At 50 million, right? A loss of, or you can say expense, an expense of $4 million should be recognized at initial recognition to correct the, or to make an adjustment, you can say, to make an adjustment, trader should write down its investment by $4 million. Investment, or you can say it's financial asset. It's financial asset by $4 million. Subsequently, now this is, let me leave some lines so that you guys know this is a different paragraph. Subsequently, now that's investment in bonds, right? So you have fair value through OCI, you have fair value through PNL, and you have amortized cost. In order to hold the investment at amortized cost, you need to satisfy two models. So it's a business model test that is held to maturity, and it's contractual cash flow characteristic test, right? So the point is your CCT, the contractual cash flow characteristic test, is obviously being met because there's no derivative payment, there's no other kind of option, there are no options involved in this. It's just principal and interest, right? And business model test is also being satisfied, reason being that you will hold it till maturity, right? You will not sell off this loan to someone else. It's something that you will get all your cash flows from, right, till the maturity. So subsequently it should be held at amortized cost. Now don't stop over there, right? Don't stop at this. Subsequently should be held at amortized cost. Why? Because it satisfies both the, now the point is there are two types of students, right? Let me just write down both the business model test and contractual cash flow characteristic test, right? Now there are two types of students. One type will go to the extent where they explain the business model test and the contractual cash flow characteristic test, and some students will just stop at that. Both approaches are correct. What I believe is that you don't need to explain the business model test and the contractual cash flow characteristics test. Reason being that once you've stated that this is the reason why we're holding the loan at amortized cost, is sufficient enough to tell the examiner that you know your stuff, you have that knowledge, you know why trader will hold this at amortized cost. All right. So subsequently it should be held at amortized cost because it satisfies both the business model test and contractual cash flow characteristics test. Now the point is that you have to, the loan amortization schedule will start from $46 million, right? So you can just state it, or you can just put it out in a schedule form, right? So interest income, interest received, and balance carried forward, right? So 46, or I'll just use the value that I've taken over here, right? Interest income is at 6%, whereas interest received it as 1500, same as coupon rate into par value, right? Your outstanding balance will be, the outstanding balance will be 47250, right? So 47250 will be your outstanding balance. Now the point is that this interest income needs to be this, you can call it as 2.8 million, right? So your investment or your financial asset debit 2.8, right? And your P&L, because this is your income, right? Credit 2.8, right? Now the point is Discuss with suitable business how the loan to the charitable organization should be dealt with in the consolidated financial statements for the year 31st May 2023. We have stated how. Did they ask us for the correcting entries? No. So there are no marks for it. Number one. Number two, if you write it down, you're wasting your time. All right. Always make sure that you know the dimensions of the questions of the requirement. All right. So what's the first point, second point, third point, fourth point? That's it. You don't need to go further. The most you can, like I told you earlier, that the most you can do is explain business model test and contractual cash flow characteristic test. That's it. Nothing else. Right. So that will be your answer for trailer part A1.